Hello, Oracles! Today we're going to go over all of the dividend changes that we had seen from last week. At least the notable ones that I have in my portfolio, and some others out there that I think are important in the dividend community. So again, tomorrow we've got the election that's going on. The rest of the week could be a bit uncertain between that and the FOMC meeting. So I'm really not too concerned about how the market's going to move one way or the other. Again, when it comes to dividend investing, you're looking to be purchasing income. What prices are you going to be purchasing this income at? If we see a market sell-off, you're now buying it at a discount. When it goes to long term, you pay attention to dividend changes like we're about to talk about today, and you take a look at companies that are growing their free cash flow despite any turmoil or uncertainty in the market. Because don't forget, the stock prices are going to change based upon sentiment, other things that are going on, and not totally fundamental factors. So when you're looking at most stock price movements, moving on things other than fundamentals, you can then use that to your advantage to say, hey, there's an emotional swing in the stock market in one way or the other. I can purchase at a lower price if it emotionally swung down, but the fundamentals of the company are still strong, which means that they're going to be increasing their dividends. And if they're going to be increasing their dividends and I'm going to be paying a lower price for it, that's just a win-win situation for everybody out there as far as income dividend investing goes. So that's why I want to share with you guys on a weekly basis what dividend changes we are seeing, because then you could take a look at some of these companies yourselves, dive in deeper and ask yourselves to do the research and say, hey, is this company something I want to buy myself? Now I'm looking at these are the changes and I'm just kind of bringing it to light to you guys. So before we get into this, please make sure you hit that like button down below, subscribe to the channel. It really helps the channel grow. All right, so first thing we're going to get into is some of the weekly plays that I have. So first I have the ultra yield dividends and I have the high yield dividends that I play with, and neither of these I drip in. I'm using these strictly as cash flow. Some pay out weekly, some pay out monthly. These here, I'm not looking to see that dividend growth on a long-term basis like I do with my dividend growth companies. These here, I'm just making sure that the fundamentals are fine. They're not falling apart. There's no issues that are going on with the structure and how they do it, whether it's a covered call strategy or what they're doing. I'm just making sure that they're still in good standing. They're still doing well. And I know that it's going to be fluctuating up and down on a month-to-month basis. And that's all based upon volatility, which going into the election, you should see some volatility. Now, granted, we didn't see a lot of that in October, so some of these ended up coming down. But again, this to me is just extra cash coming in to be able to buy the dividend growth stocks that we'll talk about on here as well. So the first one up, we got YMAX. YMAX went from 22.68 cents per share to 22.47 cents. A little bit of a dip, not a big deal. That one pays weekly. WDTE also pays weekly. That one dipped down from 25.25 to 24.98. And QQQY also pays weekly. That one dipped from 27.41 down to 25.53. Now, those two last ones, WDTE and QQQY, I'm paying close attention to those because those two ETFs play on a put strategy versus a covered call strategy. And these here, because the market has been going up, have not been doing as well. So if we see a pullback in the market, they should be doing better. But the problem with a put strategy is if they end up selling off too fast, they'll be having to purchase those puts that they're making. And then we've got to play some other games and it's not as beneficial. So those two I'm just monitoring. There's a few other ones I'm going to be paying attention to. And this Wednesday, we are going to be having Darth Dividend on here. And I'm going to be discussing a lot of that with him as well. What ultra yield dividend plays out there are worth getting into because there's a lot that have a lot of NAV erosion. There's a lot of issues that, they're not going to be doing well in the long term. And these aren't plays that I look to hold long term. I'm looking for that immediate upfront cash to kind of give that steroid injection to my portfolio to be able to boost up the dividends in my other plays a bit faster. That's really strictly what these plays are for. And within the next 5 years, I plan on getting rid of them entirely. So I won't need those anymore because they're not tax efficient and they have that NAV erosion. They have high expense ratios. These are not things to keep long term. They're just those things to be able to put in there to get that quick boost of cash to be able to build up other positions. At least that's what I'm using them for. So I want to have Darth Dividend on here on Wednesday to get his thoughts and perspectives on a lot of these because I do want to add one or two more to my portfolio just to give it that little bit of an injection as my portfolio grows. So we'll talk about that on Wednesday. But then we've got some of these other covered calls. We've got JEPI that came out that pays on a monthly basis. They dropped theirs from 39.2 cents to 37.5 cents. JEPQ is another good one that's out there. That one dropped from 55 cents to 49.4 cents. Now, these two here have also seen quite good equity appreciation. So the ETF price has gone up as well on these. So we know that that dividend is going to fluctuate month to month, but we're just also paying attention to how it's going to be growing with the equity appreciation. Now, we did see in 2022, both of these did outperform very well, and their payouts went up significantly during that time frame when we saw a strong bear market. So this is why, with potential uncertainty going into 2025, maybe we get a recession, maybe we just get uncertainty with a new presidency, we could be seeing some very good outperformance from the two of these next year. Now, nothing is guaranteed, but if we see similar playouts as we saw in 2022, could be a very good year for them. And now to get into the individual companies. Now, I do have a couple in my higher income plays. One is a BDC. We have Hercules, that is HTGC. They went up on their dividend about 20%. Insane growth. It went from 40 cents to 48 cents. Now, they had a very poor earnings call over the summer. The stock price itself dipped down significantly. We just had their latest earnings. They did relatively well, but they're giving a weaker forecast. So it's been slowly trickling down in price. Today, it just crossed over that 10% yield threshold. Now, all BDCs have also been getting beat up significantly over the last couple of weeks, just because despite the fact that we saw interest rate cuts, we've been seeing yields going up on bonds. That is not very good for the BDC market. So because that's not very good for the BDC market, we have been seeing that sell-off. Between that and REITs, both have kind of seen a reversal from the last few months. Now, the last few months with the interest rates coming, both of those saw significant run-ups. Now they're just selling off a little bit from this. And again, it's kind of sector-wide, so I'm not concerned about the company itself. So to see a bit of a sell-off, I have been adding more to this position because that's what my portfolio has been telling me to do. But again, going up 20% on their dividend is awesome, especially seeing, again, as I said, when you're seeing a good company go up on their dividend and see their price come down, you're buying more income for less. Next is Hess Midstream. That is one of the energy plays that I have, and they went up about 2.5% from 66.47 cents to 68.46. Not huge growth, again, right in line with inflation, right at the lower end of what you might see at your job, but they do increase several times a year and they do pay special dividends. They've seen great equity appreciation growth as well. So for them, I'm just holding it as is, and we'll just make sure that this one continues going forward as it is. All right, now we're going to get into some of the dividend growth stocks. These are the bigger names that a lot of people know about. First, we've got ABBV going up 5.8% from $1.55 to $1.64. I did get rid of my Eli Lilly last week. AbbVie I like. I do still like Eli Lilly. I did put them back onto my watch list. So just monitoring where we're going to go from here. But again, still looking to consolidate my portfolio. So it's good to consolidate, but even in the consolidation, still good to have a watch list that's out there because there might be other good plays that I don't own. I might want to get back into it. Next up, we have ExxonMobil. ExxonMobil went up 4.2% from 95 cents to 99 cents. Now, we do know that the oil industry has been taking a beating as of late. Oil prices have been down. Despite seeing some uncertainty and volatility going on in the Middle East, we did see a bit of a spike in oil in October, but that has since quelled and come down again. But historically, oil doesn't stay down forever. So I have no doubt that oil is going to turn around and come back up in price. And in turn, these companies will turn around again. Next up, we have McDonald's. McDonald's went up 5.98% on their dividend from $1.67 to $1.77. Now, McDonald's did face a little bit of an issue going on with the E. coli problems out in the Midwest, so they're obviously dealing with that as well. But despite that, again, still going up on their dividend. So horrible to see that happen from McDonald's. They're obviously handling it as they do, but to see things like that are going on, and it's not going to be affecting the dividend at all, means that we are again being able to get more income for less as the stock sells off because of those issues. Next up, we have Microsoft. Microsoft went up 10.66%. Microsoft is just one of those companies that, love them or hate them, they're going to just dominate every single corner when it comes to earnings. They're going to continue to go up significantly on their dividends every single year. And so this year going up 10.66% from 75 cents to 83 cents. This is a company that I bought in during the COVID crash. Wish I held on to it. I didn't. Whatever. I learned my lesson to just hold longer because I had bought in to Microsoft around the $160 mark. So shame on me. I'm back into it now. And this one I'm going to be continuing to add as the time goes on. And I will continue to build this position out because look at the dividend raises that they're giving. And I don't see them going away anytime soon. And last but not least is one of my favorites. Again, if you guys have not seen the video with my top 5 dividend growth stocks, this was at the very top. This is Visa going up 13.5% on their dividend from 52 cents to 59 cents. They have historically been going up double digits on their dividends every single year. This company, again, is just going to dominate. It has that giant moat around it. They basically have that duopoly between them and MasterCard. American Express is also out there in a similar field as well. So these three credit cards are amazing. Visa showing it again with that dividend raise of 13.5%. So those are all the significant dividend changes that I had seen last week in my portfolio. You guys can share in the comments below any dividend changes that you saw in your portfolio or others that you think I should put on the list to be able to show you guys out here. On my spreadsheet, I also added a column for what months we typically see any dividend changes that are going on for all of these different companies, because typically they do it every 4 quarters. So once a year, they're going to be going up on those dividends or changing them. But typically for the dividend growth companies, hence the growth, they are going up on those dividends. So this way I can take a look and see where they're going to be going up. Kind of gives us a better idea of how to track them going forward. So that's all I've got for you guys. Don't forget, we have Darth Dividend coming on here on Wednesday. I'm really looking forward to having him on here. Don't forget to hit that like button down below, subscribe to the channel. Thank you so much for watching. I appreciate all the support. Have a great one.